All right. We made it. Butcher of Wall Street here to discuss something very important that AMC Theaters CEO Aron recently said. He had a keynote speech in which it was fairly casual, but some very important information was brought up in regards to AMC stock. And I'd say it's pretty damn bullish for retail investors. And in my opinion, it really tells you just why the shorts are working so hard to increase their short position when it appears as if the company is free and clear of the threat of bankruptcy. Thankfully, they've made some smart moves in the recent months and years. They've paid off almost $2 billion of debt in the last couple of years. I'm going to wait for this chat to come up online here so I can see it on my stream, just to make sure that everything is going good with the streams. I would like to apologize for having to push the stream back. I had to push it back an hour, but I did have some very important things going on with some customers in my logistics company. So as you understand, as much as I appreciate every single one of you and I value your time, I also have to worry about customers first and foremost. So thank you again, everybody, for being here. Giles, welcome. Giles here with us from California. I appreciate you, my friend. But everybody in the chat, I see you guys. Tammy, Shane, John, Delayed, Sci-Fi, Hilsey, all you guys who've been in here for almost an hour chatting now. Eagle Eye, C12, Jericho, Benjamin. Again, I value your time and I appreciate you, and I apologize for having to push the stream back about an hour from my original start time. Roasted Caffeine brings up a great point. It says 566 end game, and that's exactly what it seems like right now. Again, this channel centers on macroeconomics, geopolitics, and their effects on a variety of heavily shorted equities, including precious metals like silver, gold, and their ETFs, SLV, PSLV, GOLD, etc. And meme stocks, AMC, GameStop, and many others out there that I could, at this point, you could even consider Tesla a meme stock. A lot of these fantastic companies were given the name meme stocks simply because they were heavily shorted equities, and they wanted to disparage retail investors from investing in them because they were losing so much money on these companies, or should I say on shorting these companies. Doug, Tim, Donkey Kong, Harry Ape, and Cheap Token, Woody, my friend. It's good to see all you guys. You guys could not be more right on that one. Just got in from work, so perfect timing. Beautiful, my friend. At least you got a little bit more of a heads up on it. Shannon says, sent my first contribution to Lit Exchange today. Cheers, my friend. Thank you very much for that. We are working on the upcoming stock and crypto brokerage in order to send all of your trades automatically to lit markets, to lit exchanges where they actually make a difference, where they can't be front run and manipulated by dark pools and payment for order flow from wholesalers, which is what's happening right now with the majority of stocks. Keith Carlo, cheers to you, my friend. Appreciate you, ladies and gentlemen. Thank you for your investment and your trust in Lit Exchange. We look forward to building the world's best stock and crypto brokerage firm and getting away from all those commission-free trades that, as we all know, are obviously not commission-free trades. There's no such thing as free lunch. The cost is there, and it's astronomically high. You just have absolutely no idea how much you're paying for it. That's the initial problem with payment for order flow and dark pools. The real problem is the fact that your orders are internalized by the wholesalers, processed in dark pools, front run by their hedge funds, and you get left over with the scraps. They know exactly what you're buying, so they trade ahead of you to make sure that they make as much money as possible and you lose as much money as possible. So if you're wondering, is the stock and crypto market rigged? The answer is yes. Absolutely, they are rigged against retail investors. And in order to change that, we have to find a stock and crypto broker that will do these things. But guess what? It doesn't exist. Why doesn't it exist? Because they make so much damn money selling your orders using payment for order flow to the wholesalers like Citadel and Virtue that the broker dealers have absolutely zero incentive to process your orders on a lit market like the NYSE or the NASDAQ, for example, because they're going to front run your trade. The wholesaler is going to front run your trade. the market maker, the broker dealer, the hedge fund. Therefore, they can afford to pay more than the NASDAQ and the New York Stock Exchange. But when you're not thinking about only money, you realize that there's plenty of money to be made there just from the rebate from the lit markets themselves. Anyways, Al Capone, the only thing in life that's free is a smile. Amen, my friend. You could not be more right. And sci-fi thinks that they may be building a trap for shorts, and I actually have to agree with you guys. This was a keynote speech. It's quite long, in about 24 minutes in total. But I'm going to see, we're going to analyze it here live on this channel. I've seen small snippets of this, but I've never actually watched the entire thing. And I think since I've got such a significant amount, I invested over 6 figures in AMC stock as well as other precious metals and meme stocks separately, right? But six figures just in AMC stock alone. I've been a business owner for over 20 years. I've been a retail investor for over 20 years. I've got a lot of experience in brokerage, real estate brokerage, freight brokerage, and soon, as you guys know, stock and crypto brokerage. So I know a thing or two about what's going on, and that's why I decided that even if it's a long hold, for me personally, this is not for you or for anybody else, but for me personally, knowing that there's over 3.8 million Americans and 4 million retail investors worldwide per AMC's most recent information provided from their board of directors at the first quarter 2024 share counts, we know that the on-balance volume is ridiculously high and that retail investors are still holding it. Meanwhile, institutional investment is also over 30% at this point. Short interest is, nearly 20% at this point. Retail investors hold 90% of the AMC shares out there. So if you start thinking 90 plus 30 plus 20, and then we don't even know about the shorts marked as long, the rehypothecations, the married puts, divorce puts, married calls, divorce calls, is the contract, swaps, etc. I can go on for an hour, tokenized securities, etc. Failures to deliver on this stock. It's a hell of a fucking value play at $5 a share. So actually, Sato AMC stock, AMC theaters did come out in the first quarter of 2024. You are correct, and did tell us that retail investors still hold over 90% of the shares of AMC, and it is over 70% dark pool trades on AMC stock alone. When you add in all equities, over 50% of all stocks on the market are being traded in dark pools. And then you got GameStop and AMC, of which I'm a holder of both. You guys can see here, we've made these hats over 3 years ago, and the thesis has not changed because the value in these companies is absolutely astronomical, especially at these fire sale, or should I say, extremely discounted prices. So I am a long-term holder for the things mentioned above and many thousands of hours of research that I will not go into now, but you can find them on this channel across hundreds of different videos on my Twitter as well, Boss Blunts 1. Let's jump right in, guys, right? You guys have probably heard me ramble on long enough. I could literally talk about the amounts of manipulation, how they occur on this stock on a singular basis. But I'll say one more thing. In the month of August 2024, 1 second, baby girl. In the month of August 2024, Citadel Securities, the market-making broker-dealer, internalized 100% of retail trades that they handled. That means that they kept it within themselves. They sold you an IOU. They did not give you a real share. They sold you an IOU, and then they internalized it and traded in their dark pool. My daughter wants me to play Minecraft with her. So in about 30 minutes after this stream, you know what I'll be doing. I'll be playing Minecraft with my baby girl, baby boss, as we like to call her around here, because, she's the boss. Mr. Williams, as we know now that we didn't know what we didn't know then, and you think we're being played for fools still. My friend, you're more than welcome to do whatever you like with your money. I know for a fact that I personally give thanks to guys like Doug Sifu and Kenneth Cordell Bedpost Griffin, because without their greed and internalization of shares, and internalization of orders, and dark pool manipulation, we wouldn't have the opportunity we have today. There could not be a situation like GameStop, AMC, and many of the other short squeezes that we've seen on the market if it wasn't for the ridiculous greed occurring from these shorts. And it's not just the hedge funds and the family offices, but it's also the broker dealers, the market makers, the clearinghouses, etc., right? The prime brokerages, the banks. I appreciate them and like to give huge thanks to Kenneth Cordell Bedpost Griffin. By the way, his wife gave him that nickname because he threw a bedpost at her, allegedly, and as she told the judge in their divorce proceedings. I thank them every day for the opportunity to make me filthy fucking rich, and I've got no problem holding this stock for as long as that takes. Let's get right into this now.
COVID was not kind to our industry. Yeah, people have been predicting the demise of the movie theater industry since the 1930s. We all know that, radio and TV and VCRs and DVDs and streaming is all going to put us out of business all the time. And in the year prior to COVID, 2019, 1 billion movie theater tickets were sold.
1 billion movie theater tickets were sold. And I've got to say one thing, Charles, my friend, I appreciate you. I see you, and I see you that you say you're down $28,000 in holding. No choice. Actually, there are choices in life. Sometimes there are choices that we don't like, but there's always a choice. With most of the time, right? With a few things, there's none, right? Death and taxes. Even still, with taxes, there can often be choices. But with stocks like this, for example, if you're down 28K in holding, there's no choice. There is choices. One could potentially, this is not financial advice, choose to sell off their position and take the loss and realize those unrealized losses. But I see it as a fact as I haven't sold anything. So if I didn't sell at $72 a share, I'm sure as hell not going to sell at $4 a share. I didn't take my unrealized gains at 72. I didn't take my unrealized losses at 4. So in reality, I haven't gained or lost anything in that sense. The gain doesn't occur until the moment I hit that sell button. Or the loss doesn't occur until the moment I hit that sell button. And I'm not fucking selling. And I will say another thing. There is other choices as well. One could choose to average down. Now, whether this is appropriate for any individual, I cannot say. But for me, for example, if I decide that I would like to average down on my position, I could bring my average share price down by buying more shares. That would then make it easier for me to enter profitability with a lower share average. In addition, one could also choose to hedge and actually gain leverage. One could choose to hedge by going opposite of the trade with put contracts or call contracts. I personally don't like the idea of buying put contracts on a stock that I'm long on unless I'm trying to do some sort of a hedge. But for me, in reality, I would rather take leverage or DCA, which means dollar cost average. So I could either dollar cost average by buying more shares and bringing down my average share price, or I could spend a few bucks and buy some inexpensive leap or midterm call contracts. A few months out, 6 months, a year. A leap is usually over a year. It's called the leap contract. A call contract in that sense would then allow me to buy access to 100 shares per contract by buying just one call contract. That could cost me as little as $8, $10, $12, depending on how many months of theta, which means time, for those of you that are unaware, one were to choose. So for, say, $100, I could buy a portion of January 2025 calls, which is about 2.5 months. And those are $8 each. And that would give me basically access to the potential to buy 100 more shares if the stock price were to exceed my strike price. The stock price were to exceed the strike price of my call contract plus the premium that I paid. In layman's terms, that means leverage. And even if I chose not to buy those 100 shares with my call contract, if the stock price were to move significantly, I would be afforded the opportunity to sell that call contract for a premium, pending there was a significant amount of liquidity and open interest on that call contract. So I could essentially gain over 1,000 shares worth for $80. I could receive over 1,000 shares worth of leverage for a 2.5 month period. And if they were to expire out of the money, then for another $80 potentially, or give or take, depending on the price of the strike expiry, theta, etc. of the call contract, come January, I could buy another $1,000 worth of leverage, expiring in another 3 months, exponentially reducing my overall cost. However, call contracts expire. Shares do not expire. So if I want to hang on to them for a year or 2 or 3 or 5, I can hang on to them for as long as necessary and just let them sit there as my little ticket to a potential serious gain, especially since AMC has paid off over $2 billion in debt and pushed off their existing debt with excellent interest rates all the way through 2030. But 1 billion movie theater tickets have been sold. That is more than all the sports teams and major sports teams combined in the entire world.
At U.S. and Canadian movie theaters, the so-called domestic box office. 1 billion. Just to put that number in perspective, if you take the entire attendance of every Major League Baseball team, all 30-something teams, all 162 games, all season long, take the attendance in the stadium for all those games for Major League Baseball, and you add to that the attendance of all the NFL games, every single one, all 30-something teams, all 17 games now,
that's solid,
all season long. Add to that the attendance of the entire NBA and the entire NHL and the entirety of Major League Soccer. The movie theater industry in the U.S. and Canada sold 7 times the number of tickets of all professional sports combined. But, so that is a reminder that all the people who said we couldn't exist with streaming or we couldn't exist with VCRs or DVDs or TV or radio, no, Variety was founded in 1905. We were founded in 1920. People have been predicting our demise forever and ever. And there is something about going into a theater and watching a movie that's a wonderful communal experience.
1 billion movie theater tickets were sold last year. That's more than all of the major sports teams in all of the major sports in the entire world. That gives you an idea of just why AMC has managed to survive for over 103 years. And not just survive, but actually thrive. Naturally, they were shut down by, one could say, Fauci. One could say the criminals at the CDC. They were shut down for a period of months with zero revenue. And so they hit some hard times. The shorts got greedy and thought they could bankrupt AMC. Little did they know that AMC would come back stronger than ever. They're having a better year right now than they did in 2020 and 2019 before the criminal cerveza sickness. Let's call it that, right, guys?
And if many of you live in really nice houses or really nice apartments, not everybody, but I bet most of you in this room, and if COVID taught us anything, when we were imprisoned in our houses and apartments for a year and a half, we want to get out of the house.
Yep.
We want to go somewhere. We want to see people. I remember sometime in 2020, late in 2020, I went to a Home Depot. I was there for 3 hours. It was like the most exciting thing I'd done in 6 months.
He's right. You guys remember that?
The point is, then COVID came, and it obliterated our industry. The domestic box office, which is the basic unit. I'm sorry for going on long.
Yep.
The
Go on,
box
my
office
friend.
being back is a really important question. The domestic box office, which is a basic placeholder for the size of this industry, it had been over $10 billion 11 years in a row pre-COVID. It was over $11 billion 5 years in a row, the last 5 years of the 11 pre-COVID, and then COVID comes, and it was $2 billion in 2020. From 11.4 to $2 billion. That's a big problem.
It's not great.
And then it started to grow. $4.5 billion the next year, $7.5 billion the next year, $9 billion the next year. Then in this town, we're not from here, we're from Kansas City, home of Patrick Mahomes.
My guy.
And Travis Kelce and Mrs. Travis Kelce, maybe, Here,
Unconfirmed.
the mayor of Kansas City is rooting for Mrs. Travis Kelce. Someone out here decided to have 5 months of actors and writers strikes, which interrupted the flow of this rising box office coming back to where it was pre-COVID, which takes us to now. So much for ancient history. The writers and actors strikes really put this industry right on the carpet. And the box office in the first 5 months of this year was bleak. And it was in the 5 months, January, May, the box office was $1.5 billion.
Just to give you guys a heads up, I see you asking your questions in the chat. This was his latest interview, as Mr. Williams just said. This was just, I believe it was just last month here. It was a keynote speech for Variety, which was presented by City National Bank. And this is not widely distributed. So I think it's very important for us to examine this on Twitter, Facebook, TikTok, YouTube, etc., Rumble, wherever you might be watching this, and really share this with as many people as possible. So why don't you share this video with someone that you know that might be interested. If you've learned something from what I've told you so far, or if you want them to hear exactly why $5.66 is such a massive threat to the shorts, because that's coming here shortly from Adam Aron.
In 5 months, 1.5. And you all, not you personally, but many in your industry, were writing again about the demise of movie industry and the movie theater industry, and AMC was going to die. And I went to CinemaCon, was interviewed, and I kept on saying, it is inconceivable to me, as someone who's on the inside and knows what's going on, that AMC is going to have financial collapse. Inconceivable.
The CEO is coming out and publicly telling us, hey, we paid off almost $2 billion of debt in the last couple of years. Retail investors are holding strong. Over 90% of the entire float is being held by retail investors. We've managed to get excellent interest rates on our existing debt, which is very healthy. And we were able to push that debt all the way out through 2030. This is exceptional news as AMC shareholders. Almost every company out there has debt. And many companies out there operate with 10 times more debt than AMC, or 20 times more debt than AMC. Look up Comcast, for example. What do they got, $90 billion in debt? Go look up AT&T. Go look up a significant number of companies out there, Netflix, etc. And people try to say, oh, well, this company's profitable. Well, yeah, so's AMC. And the last few quarters that they've had that weren't profitable, they weren't profitable because the company spent so much money upgrading their theaters, upgrading the video, the audio, the vending machines, the soda machines, the candy. They've invested tons and tons of money into all of these theater enhancing experiences. And this is a long-term investment in the company. This is healthy debt. Unhealthy debt would be a company like Walgreens, for example, that is just absolutely plummeting because they're losing hundreds of millions, if not billions of dollars every year and every quarter. Healthy debt is a company that's profitable and is just barely every now and then in the red because they've spent so much money upgrading their theaters and buying new ones. That is healthy debt. Growing and expanding your offerings to attract more visitors, more revenue, more profit.
And I made a public prediction at CinemaCon at a panel that the industry was going to come roaring back. Finally, it's going to be a long wait. It's coming back. And here, unfortunately for us, it happened. The prediction turned out to be true. And here's just two numbers, and they're really important. And you write this one down because this explains everything. The domestic box office in the first 5 months of this year was $1.5 billion.
$1.5 billion in the domestic box office in the beginning of this year. Well, you know what? You want me to write it down, Adam? I'll write it down, my friend. Domestic box office, first 5 months, 1.5 billion.
And that was all strike impacted from production delays caused by the 5 months of strikes in 23. In the last 4 months, June to September, the 4-month box office, remember 5 months was $1.5 billion in the first 5 months this year. The domestic box office, June to September, is going to be around $3.5 billion. From $1.5 billion in 5 months to $3.5 billion in 4 months. And when we look at the slate of movies that's coming out over the next remaining months in 24, and the incredible slate that's coming out in 25, and the incredible slate that's coming out in 26, this industry is back. And all of the
Preach.
the doom and gloom stuff, those are people who are looking in the rearview mirror, but if you're looking at the out the windshield to the front, finally, it's been a 4.5-year long slog from COVID and from strikes, but this industry has a very bright future again.
It's good to hear.
Listen to that. Now that is a CEO that understands his business. That is a man that realizes that we're in a very healthy position. There was 1.5 billion in the first 5 months in the box office this year. And in the last 3 months alone, there's been over $3.5 billion. And AMC is looking at a incredibly massive third quarter and fourth quarter like they haven't seen here in the fourth quarter specifically since 2019 or sooner.
I definitely want to move on and ask about all the ways that technology is improving, or at least in your business, or attracting more people to movie theaters, which is probably the most important thing it can do. Before we do move on, though, I just want to say, in addition to the overall health of the business being in question, I know there was a lot of speculation about AMC potentially entering bankruptcy, but you did resolve a debt extension this summer, so you have 5 years now to repay down your balance sheet. How do you feel about your current capitalization and your profitability forecast for the next 5 years?
I'm a relieved human being because we had, as I told my own board of directors, if at the end of 23, that we needed to refinance our debt because our debt was coming due in the middle of 2026, which sounds like it's far away from 2023, but it's like it's right around the corner. And in July, we were able to announce that we'd worked agreements with 150 different lending institutions, that we were going to refinance all of our not all, but most of our long-term debt, and push the maturities out from 2026 to 2029 and 2030, which is 5 years from now. I mean, no public company, we're a big public company on the New York Stock Exchange. When public companies renegotiate their debt, nobody is able to push it out more than 3 or 4 or 5 years. Like, that's normal. And we got a normal recapitalization done. It was complicated, but we got it done, and it's an enormous accomplishment for our company because it means we have a couple $100 million of debt that's due in 25 and 26, but the billions of our long-term debt.
There you go. Listen to that again. Hear him out.
5 years more than 3 or 4 or 5 years. Like, that's normal. And we got a normal recapitalization done.
Absolutely. Very good.
But we got it done, and it's an enormous accomplishment for our company because it means we have a couple $100 million of debt that's due in 25 and 26, but the billions of our long-term debt, it's 5 years now. It's like 20 lifetimes from now. And it,
in business,
and it's normal.
Yes.
I mean,
that's
one's
right.
ever going to refinance your debt out 2 decades, but one of the most important things that we did in this refinancing is not only do we push our debt, we pushed out $2.5 billion of debt maturities from out of $3 billion from 26 to 29 and 30. But we also embedded in those new debt instruments a convertible debt instrument. Like, this is inside baseball.
Here it comes.
I apologize.
Here it comes.
It was like really important for my company because it means that.
I'm going to stop him for a quick moment there to say this is important. He just got done telling you guys we got the maximum of any normal deal of over 5 years in which we were able to refinance. We worked with, I think he said, over 100 different companies in order to refinance all of this, which is $5 billion. That's 5,000 millions. And again, may sound like a lot of money, but at the same time, this is for a 103-year-old company that is building itself up and has paid off over $2 billion of debt in the last couple of years alone. And now we are at a point where the box office, the production delays, and the strikes are over. The cerveza sickness, the bullshit, and the scamdemic with the CDC are over. This company is ready to rock and roll with brand new theaters, video, audio, the whole 9 yards. Here comes the important part.
Variety can't write articles not like we're dead anymore. So one of the key things, we did a $400 million convertible debt instrument, which if our stock hits $5.66 a share, and we're within a buck of that right now, $400 million of our debt automatically converts to equity, which lowers our interest expense and lowers our debt ratio by close to $500 million.
Now that is very well stated. That is a very eloquent man here talking about some extremely complicated situations and financing terms off the cuff in the terms of billions of dollars. Aron just got done telling us that if the price of AMC stock hits $5.66 a share, over $400 million would be wiped off of AMC's balance sheet. They would receive even lower interest rates and get significantly more gains in other fashions. I'm going to rewind it here just about 30 seconds so you guys can hear this once again. But this is billions of dollars of benefits. And guess who is terrified of seeing that actually happen? Shorts. Shorts are actively betting in the stock price, in retail investors selling their shares because they think that they're going to scare them with a lower stock price. But it's not only that. It's the fact that their short positions have been held and rolled over in the form of swaps for so long. It's like a massive game of dominoes. If one of these smaller dominoes falls, like Melvin Capital has in the past, Tiger Capital, and dozens of others that I've showed you on this channel, it's going to take out prime brokerages, the banks, like what happened with Archegos, the family office, taking out Credit Suisse. Archegos had massive short positions in the form of ISDA swaps against companies like AMC and GameStop. When they went out of business due to their over-leveraging, well, now Credit Suisse has to pay that money back. Credit Suisse went out of business due to their over-leverage in swap short positions against companies like AMC and GameStop. Guess who owns Credit Suisse now? Put it in the chat. I won't even say it. If you guys don't know by now, you need to be subscribed to this channel because this is something you should know very clearly. Put it in the chat for those that may be new to the channel.
Those new debt instruments. But
There we go. I rewound
one of
it.
the most important things that we did in this refinancing is not only do we push our debt, we pushed out $2.5 billion of debt maturities from out of $3 billion from 26 to 29 and 30. But we also embedded in those new debt instruments a convertible debt instrument. Like, this is inside baseball. I apologize, but it was like really important for my company.
Thank you, everybody. Right up there. So, Aron right now is telling us that as part of these deals, there is a convertible debt note that will wipe off almost $500 million like that of AMC's debt. Like that. The shorts are royally fucked. I didn't make this hat because I thought it was pretty. I made it because it gets a lot of people's attention when I'm out and about, when I'm out with the family or by myself. Might be at the grocery store, might be at the gas station, might be at AMC theaters or GameStop or the golf course. People ask me, hey, are you invested in AMC? Hey, are you in GameStop? Hey, I have that stock. What's that mean? And it gives me a wonderful opportunity to talk to people about it. But here it is, straight from Adam Aron. Again, telling you guys that shorts are fucked and they are so scared shitless of $5.66 a share.
Because it means that Variety can't write articles like we're dead anymore. So one of the key things, we did a $400 million convertible debt instrument, which if our stock hits $5.66 a share, and we're within $1 of that right now, $400 million of our debt automatically converts to equity, which
one more time.
Since
I fucking laughed. I couldn't hold it in.
We did a $400 million convertible debt instrument, which if our stock hits $5.66 a share, and we're within $1 of that right now, $400 million of our debt automatically converts to equity, which lowers our interest expense and lowers our debt ratio by close to $500 million. So that was one. The first big accomplishment was stretching out the maturity. The second biggest was getting a convertible debt part of it. But the third, and maybe the most important, is that we negotiated hard with our lenders that in 2026, which is only 2 years from now, originally when the debt was due, that if the circumstances are right, we could refinance all this debt yet again, pushing it out further than 2030. Woo. And the reason that's so important is in 2024, we're still bearing the slings and arrows of the strikes and COVID. By 2026, the box office is going to be like this. Our EBITDA is going to be like this. We will be a much better credit risk in 2026 than we are in 2024, which means that the interest rates that we will get are going to be several hundred basis points lower. Plus, as you saw the Fed cut interest rates 0.5 point.
We did see that.
Yes, we did.
That's
sure did. Interest rates are going down.
I think interest rates will probably come down, well, let's call it between 1 and 2.5 points in total from where they were 3 weeks ago. So the combined effect of lowered interest rates generally and us being a much better credit risk, when we go to refinance our debt in 26 again, we'll do so at much cheaper rates. So a close friend of mine is Rich Gelfond, the CEO of IMAX. We're half of the IMAX locations in North America at AMC.
Look at that.
Look at that. He used to.
The number one theater company in the world has more than half of all the IMAX locations in the entire world compared to the thousands of other movie theater chains and movie theaters out there. That is how you know that they have the best of the best in terms of quality.
The joke that we lie when we say who's in our management team, because he's sure that Harry Houdini still works at AMC. But surviving COVID required us to thread the needle well. And there were many out there who questioned whether we would be able to thread the needle. But we did, and I can tell you with such confidence that the combination of resolving our balance sheet with a rising box office, which means rising profitability, we get to play on offense again. Our industry has been playing on defense for 4.5 years. It's all changed. And if you want to circle a date in your calendars, circle June 14, 2024. Inside Out 2 opened. And it's not just been Inside Out 2 and Deadpool and Wolverine. It's been movie after movie after movie after movie has worked and has been a big success. And as I said, the box office has gone from $1.5 billion in 5 months to $3.5 billion in 4. It is a totally different industry. We made it.
Absolutely.
We've made it. We've made it.
Still some way to go.
It's inconceivable
I want
that
to
we'll
talk
go
about,
back.
so in terms of the technology, as it applies to something like AMC theaters. I think that what your company's been investing in are formats that people used to see as premium, but increasingly are coming to expect as standard. Laser projection, Dolby sound. If you could explain to the people what a PLF is. And again, I really do think that those used to be super additive and almost like, for the cinephiles or people looking for upgraded experiences, but it's becoming standard in every AMC screening room.
So we're a big believer in, as obviously from what you've heard, in that the future of movies going in theaters is a bright future. A little shaky recent past, but a very bright future.
He's honest. He's honest.
And the way to get moviegoers to continue to go to theaters is to make the experience in theaters so wonderful that they have to get off their couches and come to a theater. And they're allowed to watch movies at home. It's okay. You ever heard of a movie called Avengers, something, whatever, one of the Avengers movies that grossed $2 billion? I checked. Netflix was in business that same weekend that Avengers opened for $2 billion. When Avatar 2 came out with its $2 billion, Netflix was in business. The industry is big enough that streaming and theaters can exist harmoniously. But if we want to capture our fair share, that share of the consumer viewing habits that we're entitled to, we've got to make going to a theater a great experience. And technology's been a big part of it. So very quietly, we made a decision 2-3 years ago that we were basically going to turn all of AMC, all 8,000 of our 7,500 of our U.S. screens, to laser projection. And we've already
sick. In case you guys aren't aware, the difference between a standard projector and laser projection is incredibly massive. It looks like you just walked into almost like an IMAX film, even if it's not, because the projection quality is just so far superior. And they're doing this to all of their theaters. Think about that. It costs money to upgrade 8,000 movie theaters. That's the theater itself. Imagine how many actual theaters are in each one of those 8,000. Most AMC locations have at least 8 theaters inside of each theater. Movie viewing areas inside each theater.
That's would be a $500 million investment to switch from old xenon bulbs to laser projection. And we've already, it's middle of 24, we've already got a quarter of all of our screens in the U.S. are now laser projection. And what laser projection does is it increases the light levels on screen by 50 to 100%, depending upon the system it replaced, which means that the image on screen is brighter and sharper and better. We've upgraded sound systems all over.
Getting a new iPhone.
Yeah. And in terms of PLFs, premium large format screens, as I said, we're half of all the IMAX cinemas, IMAX auditoriums in the U.S. and Canada. We are 100% of the Dolby cinemas in North America.
I didn't know that.
When I joined AMC it seems like yesterday, but it was 9 years ago. We had 3 Dolby cinemas. We have 164 today. We have 31 of our own house brand primes. We have 423 PLFs at AMC in the United States. And if I have my druthers, 36 months from now, we'll have 700. So
this is all really exceptional news. OJ Newton asks, where do you think AMC will be at December? My friend, as much as I'd like to answer that for you, I can't say for sure, right? So I don't want to give you, scare you or give you false hopes. I'm really bullish on the company, really bullish on the stock. I like the stock. I like the stock a lot. Delayed Noise says, it would be sweet if it launches on Halloween. Trick or treat, mother effer. We're going to be rich, says LGB. M777, hodl, my guy. Adam ain't fucking around, says Damon Reeves. And Delayed Noise, yes, it does. They do burn significantly less electricity. So on top of getting a better picture quality, people are actually going to be overall receiving a better deal as a shareholder because the company's going to be saving money on electricity as well. And that all adds to the bottom line. It makes it easier to get to net operating income. The NOI is incredibly important.
Again, why? It's a bigger picture. It's a better sound system. It's better technology in the projection booth. It's the best way to watch a movie in theater. And they, by the way, they cost a fortune. It's like $2 million a screen to put in a PLF. But we're a big believer that if we make movie going better at theaters, more people are going to come to theaters.
There have been a lot of people, it's interestingly from the talent representation business that have said that your real competitor for the next 5 years is the Sphere.
Is what?
The Sphere in Las Vegas. Would you agree that that's...
I want to chime in here. Again, as a business owner, as a serial entrepreneur, I will tell you that AMC is in great shape. And what I see with them, having paid off over $2 billion in debt in the last couple of years, having rolled out the rest of their debt through 2030, not even this decade, next decade, and increasing their net revenues and their gross revenues, those are both extremely bullish things. The Las Vegas Sphere right now literally is on the verge of bankruptcy. The Las Vegas Sphere had to put in, I don't think the word is application or appeal here, but they had to file. I just saw this today. The Las Vegas Sphere had to file to keep their assets from being seized and sold off because they're unable to make their payments. Let's put it that way. The Sphere is losing money hand over fist, whereas AMC is bringing in money hand over fist. But this guy doesn't know that, right? This guy doesn't know that. He's not a businessman. He is an interviewer.
No.
You're up against?
No. Which is not to say that the Sphere isn't wonderful. Yeah. It is. Our real competitor is distraction.
Distraction.
If you
DISTR, distraction.
ask people at 2 o'clock on a Saturday night, 2 o'clock on a Saturday afternoon, are they going to go see a movie tonight in a theater? And some number of people say, yes, that's what I'm going to do. 40% of them don't go to a movie in a theater that same day because something came up. The phone rang. A kid walked in. Dog got sick. Car won't start. It's raining. It doesn't matter. Something distracted them away from doing what they were planning to do 5 hours earlier. So
it happens. Shit comes up. Right?
Going back to the Sphere, as I've said about Netflix, the consumer's appetite for content and to be entertained and to be amused is so limitless. The world is big enough for all of us to do just fine.
He's absolutely right. That response, get an absolute chef's kiss. Fantastic. That was a beautiful response. And I want to respond to a couple of your guys' and ladies' chat questions and statements. Beverly, I really think this is incredibly important. She says, here's my real question. Why did Hollywood not stand up for the oldest and largest theater? Thank God AMC is owned by retail when Hollywood went silent. I think you bring up some great points there, Beverly. There's all sorts of things out there that have been going where Hollywood has kind of, at least some of the bad actors out there, literal bad actors, have kind of turned away from AMC theaters because they were showing movies that, kind of pointed the finger at some of the things that shouldn't be happening in government and with Epstein and Diddy and many other things of that sort, right? I'll leave it at that. We'll talk about that more on another stream. But I think you bring up a great point. I think a lot of them are complicit, and they don't want this to be shown on AMC theaters, even so much so as that a movie that wasn't doing very well was pulled from AMC theaters because it was doing horribly, and those actors, bad actors, were trying to make it seem as if AMC was doing something nefarious. Well, hello, there was awesome films in the theaters, like Inside Out 2 and a bunch of other shit, right? I'm not even going to get into every one of them, but you can think of which movies are out for yourself. Why would they have a movie theater that's selling 4 tickets reserved for a movie, a movie that's selling 4 tickets when they could put a real high caliber flick that's going to sell 30, 50, 80, 100 seats. This is a business. And Adam Aron knows that.
But we have to remember to get the consumer to actually follow through and do what they want to do.
Jana, I wanted to tell you, just like anybody else that may have just joined in, Adam Aron just got done telling us if AMC hits $5.66 a share, then there is over $400 million worth of convertible notes combined in their debt payoff deal, in their debt deal, in the refinancing of their debt, pushing it all the way out to 2030 till next decade. So right now, shorts are extremely scared of AMC paying off over almost $500 million in debt in the blink of an eye. With no cost out of pocket.
I know we don't have a ton of time, but I wanted to sort of end on, we wrote a story about 4 weeks ago, which I think a lot of people actually wrote and had a very interesting life online after it was published. The headline was, theater owners plan to spend $2.2 billion to modernize and upgrade moviegoing experience. And by the time I think maybe X and Instagram had chewed on it, it was like zip lines, sound baths, axe throwing, and then maybe a couple of movie screens. So what is your insight on?
So your industry, right? Yeah. No, your industry, you got half the story right.
Thank you.
Which, by the way, that's not to be, I'm not trying to be difficult either.
Like how half the box office has come back.
Babe Ruth only hit 300, so if you get half the story right, you're doing better than Babe Ruth, and he was the greatest baseball player of all time. Yes, the industry is going to spend at least $2.2 billion over the next 3 years reinvesting back in the theatrical business. But I actually think much more exciting for the consumer. The money is not going to go into zip lines and punching back. What was the other?
Sound baths, axe throwing.
The money is going to go to, as I said before, making the movie-going experience in theaters just spectacular and captivating. And so, we're going to be investing in more PLFs. We're going to be investing in more laser projection. We're going to be investing in better seats. For any of you who live out here, we just put new seats in Burbank 16 after God knows how many years, and they're wonderful. And the same Burbank seat, 20% wider, padded, rocks. It's going into Lincoln Square in New York right now. It's going into Empire in New York City right now. At Lincoln Square, we're adding 10 inches of legroom to every row of seats in a theater. And that may not sound like much, but I'm an old airline guy, so I know seat pitch. If you take the chair that's right in front of you right there, and you push it forward 10 inches from where it is now, wait till you see how much more legroom you actually have. And so we're investing in
that's comfortable.
The equipment that makes food and drink in out in our lobbies. Very quietly, if you can believe this number, AMC invested $100 million in putting Coke Freestyle machines in all of our theaters. Why? Because they have 140 flavors. And that beats, having 8 flavor choices. 140 being more than 8. I checked. Yeah, it's bigger.
He's got jokes.
Bigger is better.
And more calories.
He's got jokes.
Not if you do the diet stuff. There are a lot of diet flavors up there.
Yes. That's
Try
my
Barks
favorite thing
Diet
about
Root Beer vanilla flavor. It's really good. But coming back to the $2.2 billion, the fact that our industry is willing to invest or reinvest over $2 billion back into making the movie theater experience superb, I think shows the bullishness that finally exists in our community that wasn't there 2 years ago or 4 years ago. And if anything, you make a little news today, I think the $2.2 billion figure is understated, not overstated. Yep. And I'll give you a case in point. I know what number we gave NATO for that they added up to $2.2 billion. And we gave them a number of $500 million. And I actually know for a fact it's going to be $600 million. And I'd like it to be $750. So already I think the $2.2 billion figure is understated by at least $100 million and possibly by $250 million just from AMC alone.
That's huge.
So as I said, the whole takeaway, I guess, from our conversation so far, I think is very simple. It was easy to get down in the dumps in the last 4 years, given all the challenges that the world faced. And the world is still a mess, right? There's war in the Middle East. There's war in Europe.
Biden-Harris are president.
We have
it's a mess.
Big election going on in case any of you
We
didn't
do.
notice. But fast forward with what's changed, with the box office going from $1.5 billion to $3.5 billion in the span of like 4 months. It's a very different industry today than it was yesterday, and we've seen the movies that are coming out. It is going to be one hit. There'll be a flop every once in a while, but it's going to be one hit after hit after hit after hit. This is going to be such a successful industry again, profitable, healthy, investing, playing on offense. And those are the articles that are going to appear in Variety about AMC going forward, not how are they going to pay off their debt?
Thank you.
Which is what it's been for the last 4 years.
Well, thank you for being such a fierce advocate for a medium that we all very much love. Adam, Aron, everybody.
I got to give it up. I got to give it up to Adam Aron on that. He answered that
Fast forward.
very, very vividly, very eloquently. The man knows exactly what he's talking about. AMC's paid off over $2 billion of debt in the last couple of years. There's over $400 million in convertible notes that could literally wipe out almost $500 million in debt if the stock price reaches $5.66. If that's not fucking bullish, I mean, it is fucking bullish. Who the fuck kind of statement is that? It's absolutely true. Hey, if you guys got hit with a Biden-Harris commercial, that shit's just hilarious. Because, yeah, they can... I'm not even gonna say what I think about them, right? They're a bunch of deep state puppets. We need to do the only thing we can to vote against the establishment, and that is why you see my president right there. Cheers, my friends. I wish you peace and wealth. We're gonna be filthy fucking rich. Let's go. Thank you all. Thank you especially to the channel members. Huge shout out to the supporters of the channel. Thank you very much. I'm going to do a special live stream for you guys this week. Just channel members only. No offense to everybody else, but I got to show love to our supporters as well. If you guys haven't already, go to litexchange.com and check it out. You will not be disappointed.